Hello, today is December 21st, 2024. As always, we'll start with our disclaimer, go over our calls, make our predictions. Start with our disclaimer. It's my trading plan for Monday, which is December 23rd, 2024. Remember, my plans can change, my plans can be wrong. Trade at your own risk. One of the systems I use, not the only one, is the MEJT system. It gives targets. It says nothing about entries. For Friday, we're looking for the pattern with the early high. Tends to be a rally day with a high in the fine Laura. Failure is a straight line drop. Well, this is the early high pattern. We had a rally. There was no high in the fine Laura, and there was no straight line drop. Now, time doesn't run out until Monday's open. So at Monday's open, either we should have a straight line drop by gapping down, or a rally overtaking this high by gapping up. So I'm looking for a strong gap at Monday's open. Now, as far as the pattern was concerned, I didn't like the recent action. I said it was far too oversold for me to go short, but I was going to pass on any long trade even though there were signs of a low. Well, after I said it was too oversold for me to go short, futures collapsed overnight. And after saying I was going to ignore the buy signals of the bottom, we had a huge rally. All I can say is I've missed plenty of winning trades, but I rarely take a losing one. So I didn't take a losing one, just missed some winning ones. This is a reminder of what we said. Let's go over what happened during the day. Right near the low, MEJT said ultimately higher prices would print. Of course, I didn't know this at Thursday's close, but they did print, and we certainly got a rally. There's an optional lower target, 58, 54, 52. Doesn't have to print, that's why it's optional. If it doesn't print Monday, we'll forget it. It has a good track record, but it's not perfect. We got a MEJT sell signal in the afternoon. This blip up was called false. We've done enough to satisfy the sell signal, so that's already played out. We found some support from DeMarc's TDST line, but we still haven't managed to close over the 50-day moving average, and we still haven't managed to take out prior highs here. So for right now, this is the active move down, and this is just a corrective wave up. If you measure from the start of this wave to this low, right now we have a 61.8% pullback, which is one of the places at which pullbacks tend to stop. And then we have a bottom here at the 38.2% level, which is one of the places where this pullback stops. And if we're going to have a rally now, that's a logical place for it to begin. Doesn't mean it has to work. After Wednesday's close, we said DeMarc's indicators called for a move back to 59.47.35 on Friday. I should say after Thursday's close. We said a call for this. No, take that back. On Wednesday's close, call for the move back to 59.47.35 Thursday. We came close, but it didn't happen, so that's a miss. Friday, we got the level, so it missed by a day. The way I do things, if it misses by a day, it's still a miss, but at least we got the number. We had 5 waves up for wave 1 from the low, and we're going to have to find some way to count what's happened since then. We have from this 5 waves up, we had an A, a B, and a C for A. We had wave B ending here. And if it ended there, I didn't want us to trade lower. Then I think 58.48 is what we said, because that would be measured from 23.6% to 100%. I figured that would be about as low as we'd go, and that would be here. And we went past that. Now it's possible to count this wave C as being an ABC without breaking any rules. The wave would end here. And if we do that, we hit the level right on the nose. So I think the idea was right. We just had this wave blue C of red B ending in a different place. So let's say we've completed this red ABC down. C is 4.236 times A. If you have red B ending here, and you look at this, you can count this as ABC for A of red C. That's B. And 50% is right there. So we have a good wave count for green A. After completing 5 waves up, you have to complete 3 waves down. I mean, this could end here, but I just think it's A of an ABC. We'll have to see. And now we have to see what happens after we've completed 3 waves down. If I'm counting this right, we should have 3 waves up. Well, there's your A. B has to end someplace. That's a logical place. And if we stop here, which we don't know yet, and if C is equal to A, we're going to retrace all of this drop, and that would be where we stop. You can take this as his A, and that's B, and C stops right about there. So if we move up from here, retracing this is a logical place. Now you can count this as a inverted, a diamond on stilt. Here's your stilt. Here's your diamond. And the stilt up can have one pullback. So that would be the origin of the left stilt, which is where you find resistance. So if you're going to go up, we come right back up to here someplace. And I've been looking for a place to initiate short positions that would take out the target. Find resistance from that, resistance from the FOMC price, and even well after these prices printed, they can be support resistance. I mean, this is the November FOMC level. Here was support, here's resistance. So if we do gap up right around the 60-60 cash level, I'd find resistance, and that would be a place where you could consider going short. Let's not forget we have an optional target on the downside, and if we drop instead, there's probably going to be some other way to count that. So there should be a pretty big move. There isn't just one correct count, but this is what I'm doing. We said we should have 5 waves up, and this could be wave 3 in black, of 3 in magenta. And if we do come back up to the 60-60 level, this would be A, that would be B, and if C is equal to 161.8 times A, so if this is A and that's B, if we get the rally and then C is 161.8. It would come down to about the 56.60 cash level, wouldn't intersect 1, and would be about a 38.2% retrace, so there'd be good fibs if that happens. If that happens, there could be a rally to give us the fifth wave, which I think would truncate, and that would complete the pattern. The catch is, well, there is no catch. That would complete the pattern and complete wave magenta 3. Doesn't have to work that way, but it's a reasonable path. Well, Monday's pattern has the early high regardless of where we open. Friday's pattern either closed at its high or featured a straight line drop. It's likely to be addressed by gapping sharply at Monday's open. So if we gap up sharply, the wave count favors a retrace of Wednesday's drop, and that's resistance. If we gap down sharply, there's a much lower optional MEJT target. The wide swings we've been seeing lately are typical of the market making a significant top. Big swings happen at big tops. The fact that breadth deteriorated further despite Friday's rally adds support to this interpretation, and is why I'm reluctant to enter long trades in this environment. I mean, think about it. We had this huge reversal, a huge rally, and the number of stocks and favorable patterns dropped. That's not a healthy rally. That being said, there are numerous signs of a rally before we begin such a drop. It's a very bullish time in the calendar. It's not the time collapses begin. There was a volume spike, which usually happens near market lows, and the Nasdaq McClellan and the Nasdaq McClellan oscillator and the volatility index reversed through their lower Bollinger Bands, giving buy signals. So there's a reasonable chance we're going to rally up to here first, and that would be a reasonable time to initiate a short position with a pretty close stop. I think we're making a top here. I don't think it's the top. I think it's a top. But if it happens, we could have a significant pullback, and we could hit 56.60, and I wouldn't want to be around if that were to happen. For right now, it's the pattern on Monday with the early high. Should be a strong gap. We have levels to look for if we go up, a level to look for if we go down, and that's today's call.